I thought today, even though we've talked about it before, given the number of questions you've emailed me, and given the fact that it's just at peak tax time, that we would talk a little bit about taxes, how they work in the United States. It's a problem how many people don't understand our tax system, and this is a chance to go over it in terms of what's happening now. But before I do that, allow me a few moments of business and self-promotion, which I'm not good at. This is my website. Everything I do these days, excluding visits to the bathroom, is on the website. Here, rdwolf.com, very easy to remember. Videos, audios, media interviews, speeches, you name it. The events I'm doing, if you want to go to another place beside this one, and hear or see what I do, you get it listed there. So please, it's free, it's open all the time, so make use of it and let other people who might be interested in ongoing economic analysis know about it as well. Number two, I was invited and have agreed and have begun to do a weekly radio program called Economic Update. Every Saturday from noon to 1 on WBAI. They also put it on their archive. You can go to WBAI.org and get it at some later time if Saturday from 12 to noon isn't convenient to you. And these programs are put on my website within a day or two afterwards. So that's another way to get at it. I also am interested in questions. The last part of each hour program, I answer questions. Because the program is also carried in other radio stations around the United States, and we hope to have a lot of them soon, but it's already in Los Angeles and so on, having call-ins, live call-ins, doesn't work real well. So what I do is I ask if people are interested, email me a question, and then I answer it at the end of the program. And if you're interested in having your name associated with the question you ask, I'll be glad to mention your name in the program as well. The third thing is, I need, in case any of you is a volunteer or interested, I need help with videography, people to video stuff that I do or that I participate in. And if any of you is interested, I'd be glad to work out something, put your videos that you do up on our website, giving you credit and so forth. So if any of you is interested in or working on something like that, please talk to me. I'd be very interested in seeing if we can work something out. My thanks to Kaz, who is doing the task for this evening. These talks that I give also go up on my website, and you can see what we do here, there. Okay, an immense number of things have happened over the last month or so since we met. Really dramatic, major things. I can't possibly talk about all of them. I'm going to mention a few quick ones at the beginning and then get into the issue of taxes, which is partly an update and partly an exploration of a topic that we would have sooner or later gotten to as such as well. Perhaps the best place to start is with what happened this week, literally on Monday. Monday, as you know, was the literal last day to file your taxes in the American system. It was the 18th. And one of the three rating companies that dominate the field of rating, remember I've mentioned those to you in the past, Moody's, Standard & Poor, and Fitch. One of them, Standard & Poor, dropped a real bombshell on the world on Monday. And it announced, and of course that was no coincidence to pick tax day, they announced that they were declaring that the debt of the United States government is under a negative watch. What that technically means is it doesn't look good. And so the absolute best rating that that debt has had for as long as I can remember is now under question and may be reduced from its AAA to something less. This is a way of an official company whose job it is to tell you how risky various investments are, to let you know that what used to be the least risky investment in the world no longer is.
What is the least risky?
Well, there are other countries that have AAAs. I don't know which ones they are, but there are other ones. If you go to Standard & Poor, they have right on their website, they'll give you a list of what the ratings are for different countries, and you can find that out. Within 2 hours, the Foreign Ministry of the People's Republic of China issued a statement calling on the United States to take the appropriate steps to put its fiscal house in order and to take further steps needed to safeguard the investments that other countries have, namely the quantity of the United States' debt that they hold. It should not be lost on anyone that the largest communist country in the world, being now the largest creditor of the United States in the world, was chastising the biggest capitalist country in the world for its bad economic behavior. If nothing else makes you laugh these days, this should give you at least a few moments of a certain kind of ironic humor, if nothing else. The story carried by Reuters of the Chinese Foreign Ministry's statement followed up with the most recent data. It turns out that China has, as a reserve, a quantity of currency that it has accumulated as a reserve for a rainy day. Their reserve funds in foreign currency are now over $3 trillion. By far the world's largest. 2 trillion of that are invested in dollars. 2/3 of the foreign currency reserves of the People's Republic of China are in dollars, and I would guess that by far the largest chunk of that is debt of the United States government, U.S. Treasury bills, bonds, and notes that they have accumulated. They've taken all the money they've earned from producing all the outfits you're all wearing, among other things, and they've taken that money and they've lent it to the United States government. That's how they hold the backing for their currency and their funds to take care of exigencies. They keep accumulating them because they're doing very well and they don't have exigencies. And when they do have an exigency, like the crisis of 3 years ago, they acted very, very fast to spend an enormous amount of money to keep their economy from doing what ours did. And so far, they have succeeded. Okay? This now means that everywhere in the world, everyone who holds his or her wealth, either personal wealth or corporate wealth or national wealth, in the form of dollars, is more nervous than they were on Friday. That's the point of having these rating agencies. That's the meaning of having your rating reduced. It's not a panic. Everybody isn't going to sell dollars. That doesn't happen so quickly. But everybody is worried. And it probably means that quietly, gradually, those who have more dollars than they're now comfortable with will reduce them. And that is not just big governments, but that's little individuals who, for example, know enough not to hold their savings in one currency. That's putting all your eggs in one basket. But that they maybe ought to have some other currencies. So even if it's only $5,000 or even only $500, they might go and do what is easier to do today than it ever has been, which is here in New York to go to a bank, which you can do, and take your dollars and convert them and hold them in an account in the bank in another currency, thereby protecting you against a default of the dollar. The dollar has been shrinking over the last several years and is now approaching its low from the horrible term of 2008 relative to other currencies. So this is already going on. People around the world have seen this. This is the first official recognition that the United States is accumulating a level of debt that is unsustainable. Under the law of the United States, for the United States to keep accumulating debt, Congress has to pass a law allowing the government to borrow beyond a certain point. So periodically, when the government keeps borrowing and bumping up against the debt ceiling, the language you'll see, then there has to be a vote in the Congress to raise the ceiling. The next big theatric of Washington in the weeks ahead will be around a vote to raise the ceiling. Obama wants it, Geithner wants it, the Republicans want to make theater out of it, and the Democrats would want to make theater out of the Republicans making their theater. And you'll see that that has been recurring. We're going to go through that with you in a few minutes, because we just had several weeks of that. But that was a rehearsal. Now there'll be another one, and there'll be more after that. So the government owes this amount of money. This year, we're in the middle of the fiscal year. The government doesn't run its budgets from January 1 to December 31st. That's a calendar year. The government uses something called a fiscal year. And that actually runs, if I remember, from October 1st to September 30th or something like that. We're in the middle of fiscal year 2011, right about the middle of it now. And here's what we know about the budget this year in the United States. And keep in mind that we already owe $14.5 trillion. This year, the government of the United States is on track to spend $3.5 trillion. I know it's hard to get your head around these numbers. $3.5 trillion is 3,500 billion. Okay, a trillion is 1,000 billion. So 3.5 trillion is $3,500 billion is the expected expenditure of the United States government today for all the things it does. It is taking in taxes this year 2.0 trillion. The overwhelmingly most important tax for the federal government is the income tax. Income tax is levied on individuals, that's what you all pay as of 3 days ago. And the other part of the income tax is levied on corporate income, the profits a company earns. There are other taxes, but the income taxes are the key way the government raises money. So the government is running a deficit. It is spending $3.5 trillion, it's only raising $2 trillion. So the difference, it's a higher mathematics than economics is very famous for. This is now $1.5 trillion. That's the deficit. This year, what does the deficit mean? Well, the only way the government can spend $3.5 trillion if it's raising in taxes $2 trillion, it's got to get the other $1.5 trillion someplace. It's not coming in taxes. So what the government does, literally, is go and borrow. They borrow $1.5 trillion. They add that to the $2 trillion in taxes we all pay, and that gives them the $3.5 trillion that they're going to spend. Okay? Well, now notice with me something. $1.5 trillion, $1,500 billion are being borrowed this year. That means, of course, that the government is adding to the debt it already has an amount of money that is very impressive. This is over 10% of that. Our national debt is rising at 10%. What is the rate of growth of output in the United States? The total growth, the total output of goods and services produced in the United States is growing this year compared to last year by the current rate of 2.5%. Okay, here comes this higher math again. If the debts of the United States are rising by over 10%, but our output of wealth is rising by 2.5%, then our debts are rising much faster than our capacity to pay. Okay? That's always a sign of an economy in trouble, just like it's a sign of an individual in trouble. If your debts are rising at 10%, each of you, but your income is only rising at 2%, it's not going to take very long before your debts exceed your capacity to pay, which is part of why we had a collapse in 2007 and 2008, because a highly indebted corporate sector and a highly indebted individual consumer sector was running out of money with which to service the debt. It's called pay the interest, pay it back. So we as a nation are in that situation. That's why Standard & Poor, as a company, is supposed to look at a situation like this and say, uh-oh, lending to this kind of an entity is a problem because you're going to be lending to a country that is out of control. It is borrowing way too much, too fast, relative to its capacity to pay. If you pay attention, of course, you knew this before Standard & Poor had to make a statement. But making a statement, if you're one of the largest companies in a country about your own country, you can be sure that there were lots of nasty telephone calls between the Standard & Poor executive suite and the White House about whether to do this, how to do this, when to do this, in order to try to control the damage. Stock market dropped when the announcement was made about 250 points in a matter of minutes, just to give you an idea of the fear about where this may lead. So that was a dramatic event. We're going to come back to talk about that as well. Second event of some interest took place in the little country that has become so important in all of this, Iceland. Iceland. The Icelandic situation is extraordinary. And it's worth a few minutes just to update you on it, because otherwise Iceland might not figure in a major way in your daily life. Iceland is a little country. It has 170, 180,000 people. I think the total population of the country. The people all live on the edge of the island because the rest of it is literally ice and so forth. They got all excited in the 1980s and 90s by deregulation, just like we did here. And the people who got most excited were the bankers of Iceland. But being that it's a small country, the bankers of Iceland is a small group. Three banks. And the executives in these three banks, they got so excited. With deregulation, they could suddenly make loans wherever they wanted to, and even more exciting, make deposits. So they became active, not just in Iceland, because that's a limited economy, if you think about it, it's kind of small. So they expanded. And they expanded to two countries that they had historical relationships to, Britain and Holland, the Netherlands. And they set up branches all over England and all over Holland. The Icelandic banks set up branches. But they were so excited with all the new things they could do, lending everywhere, for people building houses, for company expanding, and getting good rates of return, that they offered very nice rates of return to people who would take their deposit out of a British bank and put it in an Icelandic branch, or out of a Dutch bank into an Icelandic branch in Rotterdam or Amsterdam and so on. They began to accumulate lots of depositors' money, which they were happy to get, and they made wonderful loans, and they used that money to make investments. Oh, they even bought asset-backed securities here in the United States. Securities backed by mortgages from people who didn't have anything with which to pay them back. But in the good, yes?
They bought them because Standard & Poor's said.
Absolutely, and many others gave them a good rating, and we've been through all that. That's right, good, you got it. Anyway, everything was wonderful. The Icelandic banks expanded. Pretty soon, and the numbers here are spectacular, pretty soon the amount of money collected and worked by the Icelandic banks, the three banks, was several times more than the annual GDP of all of Iceland. The banks were becoming the tail that wagged the Icelandic dog. And then the crisis hit, and then something remarkable happened. Everywhere banks discovered that the things they had invested in weren't paying off. The value of their investments, what the banks had made loans, they couldn't get those loans back. And if they couldn't get the loans back, what are they going to tell the depositors? Because it was with the depositors' money that they had made the loans, which is how banks work. Lovely executives, half a dozen, And each of the three banks had taken billions and billions of depositors' money and made lots and lots of bad loans with them. And now they had no money. And the depositors, noticing that there was a crisis in the world, became a little nervous about their deposits in what was, after all, a branch of an Icelandic bank far away. And so they began, at first in small numbers, in England and in Holland, to go to the bank and pull back their deposits just to be safe. And they noticed the look on the face of the clerks. And they called their Uncle Sadie, their Uncle Harry and Aunt Sadie, told them about the funny look on the clerk's face, and more people began to go and pull their deposits out. And then the banks had no more money. And the banks began to say to the depositors coming to get their money back, have a very nice day, enjoy the sunshine, come back in the near future, maybe we'll have some. This produced a panic. That's what it's always called, a panic. In that moment, as the crisis was spreading in England and Holland and many other countries, the governments of Holland and England decided it was too dangerous to let these foreign bank branches fold, collapse, go out of business. Because the fear, and they were right, is if the front page of the London newspapers or the Amsterdam newspapers carried a story of the collapse of these Icelandic banks, then the Dutch and British public would say, maybe the money in my British bank is in no better safe situation than the one in the Icelandic bank. And the fear in the Dutch and British governments was panic would sweep their entire economies. So the British and the Dutch governments stepped in, as was done in the United States too, and immediately declared that the government will guarantee all the deposits. That the bank can go kaput, the bank can vanish, the branches can be shut, which they haven't. But you don't have to worry, because if you're British and you have a deposit in an Icelandic branch, the government of England will make good your deposit, which is what's been happening. The British taxpayer has been able to pay taxes to allow the British government to make good the deposits because of the bad loans made by the Icelandic banker. That's how this works. So they've been paying out billions, but they're not happy. And the British and Dutch governments are not only unhappy, but people are angry at them as politicians because they kind of figure out, I'm paying taxes here in Holland and England, so you're bailing out crooked bankers in Iceland. That's not what I want you to do with my money. I'd rather you have a school or a hospital or take care of sick people or do something useful, but not bail out Icelandic bankers whose names, in case you haven't noticed it, you cannot pronounce. Even the people in Iceland have a hard time. So, the British and Dutch governments came up with a solution. You can't go over the bank after the banks are all bankrupt. They have no money. They're gone. They lost everything. So you can't go after the banks, there's nothing there. They came up with a solution. They want the people of the government, the country of Iceland, to pay, ready, over 20 years, a sum of money to reimburse the Dutch and British governments for what they provided to the depositors in the Icelandic banks. This would cost, ready, the numbers here are wonderful. Every year for 20 years, if the Icelandic people agreed, they would have to give a sum to the two governments, Dutch and British, equal to 40-something% of their annual output. It would be as if the United States had to pay to some other country roughly $7 trillion a year. You're crazy. Well, the British and the Dutch governments threaten Iceland. This is, you need the imagery of David and Goliath to capture this. The British and the Dutch governments, countries with tens of millions of people, are threatening Iceland. You must do this, otherwise we'll never get a loan again. The international community will ostracize you. Whoa, 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 whoa. The Icelandic government is terrified. They do need to tap international credit markets like most governments do. They depend on trade. There are hints in Holland and Britain that if they don't get paid back, they're going to seize Icelandic property. Like on the high seas, there's a little Icelandic ship going and carrying whatever they have up there, herring or something, to Spain, and on the way, in comes a British warship and seizes them and cuts it up into pieces and sells it for scrap metal to recoup its, well, you know, the world is not what it was. So the Icelandic government said, okay, we'll put it to the people, because they're terribly caught, the Icelandic politicians. They've been rotating governments real fast in Iceland over the last couple of years. In, out, few months, you're gone. Because the people don't want it, because this will be an enormous tax on everybody in Iceland. So they want their politicians to stand up and say no. The politicians say, if I stand up and say no, this entire society and economy will be gone, and I'll be blamed for it. So they did what all courageous politicians did, a referendum. Let the people decide. 2 weeks ago, the people of Iceland went to the polls. Do we give the money to the British and Dutch governments, or do we say no, under the duress of all the threats and intimidation of the terrible things that will happen to them? 60-something% of the Icelandic people gave the Icelandic finger to Holland and England. And so now we sit. But it's an important lesson because it's a population subject to enormous political pressure, intimidation, threats. If they didn't come up to pay what? The people of Iceland to pay for the misdeeds of those bankers. For the failure of those bankers to make proper investments, to be careful with other people's money that they're spending. The Icelandic people should make good the mistakes of their bankers, and the Icelandic people should make good the decision of the British and Dutch governments to cover their own rear ends by guaranteeing all of that. This was a decision that those two governments made without consulting the Icelandic people. And so the Icelandic people are basically saying, we are not going to pay for this crisis. And that's interesting, because that's a possibility elsewhere as well. Question, something? What is it called?
Yeah, I just wondering if you could make the case that the Icelandic people voted in the government that deregulated the banks.
Yes.
So in a way...
Absolutely. I'm sure that, I don't follow it that closely, but I'm sure the British and Dutch governmental papers about this will make that point.
Yeah,
that somehow it is your responsibility in the end.
Yeah.
But the people will come back and say, we voted for a government, we did not vote for those bankers, we are not responsible for what those bankers did, etc., etc. And you, the governments of Britain and Holland, you know, you didn't check with us when you gave a guarantee. You want to give a guarantee, it's your business. So, you know, I can see the lawyers having a field day, but in the end, as in real history, what the lawyers say doesn't matter anyway. It's what the mass of people either do or do not accept. Yeah.
I was just going to say that half my family lives in Ireland, and when the Irish government made that same kind of mistake, the Irish people went to the polls and re-elected them, so...
Not always. That's right. Not always. Some countries it takes longer. Yeah.
Same thing that the Irish did also. The government voluntarily agreed to guarantee 100% of the deposits instead of some number like in this country. There's $250,000 limit on it. And that's what's really exacerbated Ireland's problem.
Right. The United States government also stepped in and guaranteed all kinds of debts of our banks in this country that it didn't have to legally. It chose to do that to manage this crisis. But I want to stay with, I want you to stay with the image though. With all of the complexities, a population confronted with a choice opted to go against what the political establishment and the economic establishment told them they had to do. That's unusual. That's unusual anywhere. And that's a remarkable achievement. But before you talk, let me give you some more. We're still doing updates. Since our last meeting, something happened in another country. Portugal, just as important. In some ways, more important. Portugal's a much larger country than is Iceland. It's on the continent. It's still a small country, but it's much larger than Iceland. And here's what happened there. they have been in the throes of the same problem. They borrowed money. They borrowed money, as most governments do, from their own banks. In most countries, the governments, the entity that holds the debt of the government, that buys the bonds, are their own banks. So in Portugal, the biggest holder of the debt of the Portuguese government are the Portuguese banks. Like the biggest holder of the debt of the Greek government are the Greek banks, and so on. So in Portugal, they had been borrowing money from their own banks, but they had also, very typical, been borrowing from other banks, rich European banks. Above all, British, French, and German banks, who are the major creditors of Portugal. And those banks have been noticing that the whole world is in crisis for 3 years. Everybody's coming to borrow money to bail out their economy, led by the United States, borrowing like no tomorrow. And the United States is a big, powerful capitalist country. So if you're a bank, for example, in Germany or France, and you've got a lot of money to lend, you could lend it to Portugal, but that's a little country. It's like Iceland, you never know. Or you could lend to New York, the big United States. They choose to lend to the United States, which is why it's so easy for the United States to borrow these huge sums. But it's not easy for Portugal. And as Portugal's debts were higher and the economic crisis was really ripping into Portugal, the Portuguese government thought it could do what it always did. Borrow more, borrow more. Not tax your own people, because that makes your people angry at you as a politician. You got to spend to keep your people happy, but you don't want to tax. The solution to spend to keep them happy and not tax to keep them happy is to borrow. So the Portuguese went to borrow, as they always did. But the banks they went to said, under the new international crisis conditions, we don't really want to lend to you. Borrow a lot. You're poor. You're having a hard time in this, sorry. And you're risky. So we're either not going to lend to you, or we will lend to you. But instead of us, and you paying us the interest you're used to, you're going to have to pay us a lot more to absorb the greater risk of lending to you. Let me give you an example. Over the last few months, the rate of interest paid by Germany, which is now the most powerful, most successful economy in Europe, what they pay when the German government borrows, 3% a year. The Portuguese government, 3 weeks ago, was confronted by a demand of 10% a year, not even close. At 10% a year, when you owe as much as Portugal does, you're facing a disaster. What it means is if you're the politician in power, you're going to have to borrow this money because you dare not tax your people, but it's not going to help you anymore because you're going to be borrowing at such a high rate of interest that next year you're going to have to come in and raise the taxes to pay the interest. And you're going to have to raise a lot, and you're either going to have to tax people, or you cut your services using the money that you used to pay for street sweepers and garbage collectors and nurses to pay off your debt. And that will make your people very angry at you, and you'll be out on your nose. So in come the European banks saying to the Portuguese Prime Minister, a man with a wonderful name, Socrates, Jose Socrates. Just imagine. Mr. Socrates was being asked to commit suicide. If you know the history of the original Socrates, this should come as a certain ironic historical replay. He's a socialist, Mr. Socrates. It's a socialist government in Portugal, as it is in Greece, those are socialists. And they've been having an austerity, but it hasn't helped Portugal. And now the European governments were coming to him and saying, okay, you're going to have to pay 10%. Mr. Socrates knew not only was he going to get thrown out by his own people if he did it, but he had no option but to do it because he couldn't run his government without the loans. If he didn't get the loans, he'd have to tax them the rest of then they'd hate him too. So he was dead in the water. At that point, the European community, the European Central Bank came to Mr. Socrates. And I noticed this was never explained in the American press. They came to Mr. Socrates and said, we have an offer for you. We, the governments of Europe, will save you from the banks. We'll lend you the money you need. You won't have to pay 10%. You only have to pay us 5%. Now, for Mr. Socrates, this was very attractive. But the Europeans have a problem. Why are the European governments, strong governments like France and Germany, why are they willing to do this? Because they deeply love Portugal? Not likely. The only relationship France and Germany have to Portugal is as a place to go on vacation in the summer because it's warm and cheap if you're German or French. Here's the problem why the Germans do it and why the French do it. Because German and French banks own the debt of Portugal. And the great fear in the minds of the German and French bankers is, if somebody doesn't bail out the Portuguese, and exactly the same with the Greeks, then they may be tempted to declare themselves to be bankrupt. That's called defaulting on your debt. That's when the Prime Minister of Greece gets up, nicely dressed, stands in front of the television camera and says to the assembled bankers, "Have a nice day. No way are you ever going to see your money. We're defaulted." Can countries do that? Yes. Have countries done that? Over and over and over and over again. There's nothing new or strange or bizarre about this. When you make a loan to anyone, in case any of you are thinking of getting into this business, you should be aware that the person you give the loan to doesn't have to give it back. That person can declare bankruptcy, and then you have to sit down with them and see what you get. Maybe you'll get all your money back, maybe you'll get none of your money back, maybe you'll cut a deal somewhere in between. That happens all the time. The last time a major country did it was about 10 years ago. The country Argentina went through a collapse, and they declared to the world that had lent them money, including many banks here in the United States, we're not paying you. And then there was a lot of diggering, lasted 4 years, and when they finally settled, the Argentinians paid, I believe, about 50 cents on the dollar. So if you had a $1,000 worth of Argentinian bond, you got $500 and a nice Argentinian smile. Okay? So the fear is, why is that a fear? Because the banks in France and Germany, like our banks, are teetering on the edge of being out of business as it is. They can't take it. Now follow the bouncing ball. Suppose Portugal or Greece said, we're not paying. Then immediately the German and French bank discovers it's got a lot of paper in its vault, but it ain't worth what they thought it was. It's worth whatever they can get 5 years from now from the Portuguese government. They have to go to their own government and say, we're bankrupt, basically. You must help us. Just like the banks in New York went to the Federal Reserve and said, you must help us. At that point, the German government and the French government will have to help their banks, otherwise their whole credit system collapses. But Mr. Sarkozy is getting tremendous poll ratings these days. Oh, 12%, 18%. People hate him already because of the austerity being suffered in his country, which is milder than what it is in others. He can't survive politically by giving the banks another pile of money. And Mrs. Merkel is right behind Sarkozy heading into the hole. She's lost the last 4 elections in Germany, by-elections in different areas that have been lost by her party. Either to the left, which is most of the loss, or to the right, there's some lost that way too, yeah.
I'm sorry to interrupt, but over the last few days I've noticed that there have been comments from German ministers, economic ministers, saying that Greece's possible default may not be as bad as it once was thought to be. And there have been increased discussion over the last few days, since Monday I think, over the greater possibility of this happening. So it seems like things have kind of turned.
They may. Let's see. I think they're trying to prepare for the disaster that they're kind of beginning to see is unfolding. It's no longer a question of preventing this. It's now how you manage it. But stay with me on this. It's important to understand that the ultimate decision here is to not allow a default so long as you can. Because it'll be impossible for the political powers of France and Germany to survive, for their banks to survive. It has nothing to do with Greece and Portugal. It has to do with the vulnerability of the big banking centers of Europe to what would happen if there is this kind of collapse. So here's what their plan A is, and then yours will be the plan B. Plan A. Let's get the people of Portugal. Let's rip them apart. Let's take their wealth as fast as we can. Cut their wages. Raise taxes on these people. Spend nothing to take care of them. Save all the money that the government used to spend to take care of its people and shovel it into the banks of Europe to keep them solvent. Let's really stick it to the Portuguese and the Greek people. And if need be, the next one on the line, Spanish people, Spanish government. The next one, Italy. The next one, England, in case you're wondering. Even the English. In all those countries, the last 3 years have been probing actions. You cut this, you cut that, you cut here. You see how far you can push. In some countries, you can push a lot. We are in one of those. Other countries, you can't push so much. All of that is testing to see whether the cost of the crisis can be pushed on the population. That's why I told you the story of Iceland, because they said no. And that's very interesting. That's just beginning. Here's what happened in Portugal. The Europeans came and said, the European unified government will make you the loan that the banks are insisting on 10%, we'll make it to you for 5%. But you have to austerity, you have to cut programs, lay off teachers, lay off police people, lay off, really cut back so that money can be used to pay us back our loan. That's partly done because they want to salvage the situation without threatening their banks. It's also done politically. The people of France and Germany, all people in Europe, are just as angry as the mass of Americans. They are angry because the crisis has hurt them, not as bad as here, but bad. And it's just threatening to hurt them some more. And the government response has been to bail out the rich and the corporations and the banks, not to help them. So the anger is everywhere. And now imagine that anger in a place like France and Germany being told by the government, one of the reasons we have to stick it to you is to help another country. Now you've got the nationalism problem. Bad enough if you're sticking it to us, but you want us to suffer so that those Greek people or those Portuguese people or those... and this now begins to develop not just a critique of the left inside those countries against the crisis, who caused it, against the government siding with business, but now you get the right, because you're handing the right wing of politics in Europe an issue on a platter. All of us here in France or Germany are being taxed and hurt to help people in the south of Germany whose skin is darker, whose religion is Catholic, and blah, 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 blah. For Germans, this is a problem. For the French, it is also, since their Catholicism is a little bit like their outfit. It's not very serious. It's just a different way of handling their religious commitments. So you have a political impossibility here building up. So now there is the beginning of those who pay attention. We're not going to succeed in Plan A. It doesn't look like we can push it on the mass of people. Here's the third story. Last week, there was a vote in another little country, Finland. Something very strange happened there. An extreme right-wing party whose major issue is anti-immigrant. The true Finn party, the real Finn, true Finn party, went from, I believe, something like 8 seats in the parliament to 35 seats in the parliament. That makes them a big player in Finnish politics. They're probably going to be a part of the new Finnish government. They're a very anti-immigrant right-wing party. Why did they get such a vote? Answer, they made the campaign, we in Finland cannot and should not be asked to pay more money into the European community so we can bail out Hungarians, Portuguese, Greeks, and so on. So they got a big, so now the right and the left are pulling the rug out from the Plan A of the bankers and the traditional middle of the road left and right leaders. So the Europeans are realizing that doesn't mean it can't be revived, but for the moment, the plan to shift it onto the masses by means of an austerity doesn't look good. If next year's elections in Germany and France, this year and next year, keep going in the direction they are, that will be the end. They'll have to come up with a whole new plan, if they can come up with one, for how to manage this. That makes all of Europe an explosive, uncertain situation where it's going to go. Why is that important? Because this week, when the Standard & Poor announced that the United States is not a safe place to go, you would have thought that the dollar would lose value and people would run to the euro. The opposite happened. The euro dropped in value and the dollar improved. And the reason isn't that people were happy with the United States. They were more unhappy with what is evolving in Europe, because there's really a question of whether the European community can hold together in this situation, because the plan of how to get out of this crisis in Europe by shifting it on to the mass of people looks very bad. Meanwhile, in Portugal and in, oh, I forgot to finish the story of Portugal. What happened in Portugal is the same story. 3 weeks ago, Mr. Socrates, their prime minister, announced he was going to accept this lower interest rate, 5%, pay the European bank, everything was going to work out, and he was really going to stick it to his people. He'd already done that twice before, gone to the people, they said, we have to do this, just like they tried in Iceland, and the people went along, the party voted. This time he went with another demand, same thing, bigger crisis because they had to accept the bailout from Europe, and every other political party had a meeting. And they all went together, the parties to his left and the parties to his right. He's a socialist. I should explain Portuguese politics. Portugal has a very strong, very old, very powerful communist party. It never gets less than 10% of the vote in that country, and often more. It's closely allied with another left-wing party, and together they get a quarter of the vote. The left in Portugal, very strong, like in Greece. So the parties to the left said to the socialists, no more austerity. That's not so surprising, they've been doing that already. What was surprising was the parties to the right came to Prime Minister and said, no more austerity. And he said, why? You've supported me. They said, it's simple for us. In the newspaper. If we support another attack on the working class and the middle class by either raising taxes or cutting services, they'll never vote for us again. And we're not going to commit suicide politically to go along. So Mr. Socrates found himself alone in the government. He doesn't have a majority of the seats. So he had to, under Portuguese law, tender his resignation. Portugal now has no government. He's an interim until they have new elections for a new government, which will happen either in May or in June of this year. It's another sign, though, that a whole population says, no more austerity. We had several years of austerity. We're not going to, I bet you, I don't know who said, the Irish are coming down the road this way, too, because of what's happening there. And the British are not so far behind. And who knows? Maybe the United States. Maybe the American people. And we're going to get to that in a minute as I go through what happened in the United States. But watch Europe, the transformations, all of these things that I just described to you happened since we were last gathered in this room in March. So things are happening very profoundly and very quickly. Okay. Let me turn then to the United States and talk about the issue that has been, yes?
The GDP, what's the first word there?
Taxes.
Oh, taxes.
Yeah, I'm going to come to this. I'm going to explain all this. Don't worry, I will go through all this. Okay, we're going to turn now then to the United States and the issues that have been fought out here. They really are the same as in Europe, just the particular institutions and modalities and politicians are different. And that's important, but the fundamental issue there and here is who's going to pay for the crisis. We had a collapse of our economic system from the autumn of 2007 to the real collapse months of the late 2008, and now 2 to 3 years since then to cope with it. During that time, basically, the private capitalist system stopped functioning. Above all, the credit networks didn't work. The government panicked, which was the right reaction, I actually think. We were facing the end of our economic system with unknown political and social consequences. So the government stepped in without care or consideration, and threw every cent of money they could think of, no limit, trillions of dollars, and they didn't worry about where that money came from, and they didn't worry about the long run, because they said to each other, if we don't do something now, there is no long run. So there's no need to worry about it. So they spent billions, trillions, and now the question is, how are you going to pay for this? The government spent all that money. The government now has to, because it borrowed the money, it has to pay huge interest, just like I told you these other countries do. That's what Standard & Poor's worried about. What are they going to do? How are they going to manage this situation? It's scaring even the politicians a little. So that's the issue. Who's going to pay for this? The people who brought you the crisis, they don't want to pay. Corporations don't want to pay. Rich people don't want to pay. Nobody wants to pay. So how are you going to solve this problem? That's the issue. It's the issue in Europe. It's the issue here. But let's now see how it gets played out. Okay. Over the last several months, starting already in the autumn of 2010, this issue was already becoming clear in the Congress. Who's going to pay? So there were the following options. You could pay for all of the money spent to salvage the private sector, to rebuild these banks, to rebuild the stock market, to kind of cope with the disaster of unemployment, of home foreclosures. You can pay for it by taxing somebody. You can. But who would you tax? You could tax the rich, but they're the ones who fund the two political parties. No politician wants to do that. You can tax the corporation. They're the ones who fund the rich. You can't do that. You can tax the mass of the people, but you can't do that. A, they don't have any money, and B, they're already very angry at you, and that'll be the end of you politically. So you can't go taxing. Disappears. It's absolutely remarkable. It disappears from the conversation. It's as if confronted with the burden of a budget, you only have one option: cutting, not raising money. You all know what a budget is. A budget is the money coming in and the money going out. So we have had a discussion in this country about a budget that's in trouble, and therefore the only debate is who do you cut and how much. It's as if the revenue side didn't exist. The only time it came up was a little bit in October and November, when the Democrats thought they had a political issue, might even be good for the midterm election back in November, and President Obama said he didn't want to extend the Bush tax cuts for the richest people, people earning over $250,000 a year. So the idea was, at the end of 2010, when those tax cuts were said to expire, you would extend them for everybody who earns less than $250,000, so their taxes wouldn't go up, they'd be happy, but you wouldn't keep them as they were for the richest. And Obama said he was for that, as he had said in his presidential campaign the year earlier. Okay? Then there was a lot of haggling. The rich people said, no, 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 and President Obama caved. Cut a deal with the Republicans, and the agreement was to extend the tax cuts for everybody, rich and poor alike, for the next 2 years, 2011, 2012. That's the law under which we are operating now. So the rich people didn't have to pay, and after that defeat of Obama and the left wing of the Democratic Party, which wanted at least, by the way, just so you get the numbers, the tax rate on the richest people, the highest income tax bracket, is currently 35%. That's the Bush reduction to 35. If they had not extended it, go back to what it was before Bush, it would have risen to 39%. 4%. We're not talking large numbers here. But the wealthy in America would hear nothing of it. You're not going to stick us with the cost of this budget. That's what everybody else says. They said it in spades. So then it disappeared. So now we're coming to a new situation because in January, the Republicans, Tea Parties, and all that took over the House of Representatives in Washington because they won the majority of those seats. The Democrats have the president and the Senate, and the Republicans are going to make their noise, which they've been doing ever since. So the first issue was the Republicans, and now this is very important, you stay with me on that. The numbers are a little bit daunting, but I'll make it very simple. The Republicans said, these deficits are terrible. Well, you see their point. That was $1,500 billion deficit this year. So the Republicans are right. Deficit is terrible. There must be cuts. Remember, nobody talks about taxes anymore. The Republicans don't want to talk about it because it doesn't look good that you're the party that protects the rich people. So they don't want the conversation. And the Democrats, since they know they will not be able to win that issue, and they don't want to offend their rich people, they're happy to have it no discussion. So there's no discussion. Starting with January 1st of this year, we have a great deficit, and we do not have one word of conversation about taxing anybody to reduce it. We only talk about cuts. So the Republicans announced, the Tea Party first, we want $100 billion in cuts. Oh, that seems so extreme. So Republicans toned that down. Okay, towards the end of haggling, we want $60 billion. No, said the Democrats, that's terrible. We should only have $30 billion. And they went, and they did, and they settled 10 days ago on $38 billion. They're going to cut. Okay, let's watch now. The deficit this year is $1,500 billion. The cut of the congressmen, about which they not only debated for 4 weeks, carried dutifully by the American press as if it mattered. The two sides threatened to shut down the government over this. Okay? After this cut is enacted, our deficit will be $1,462 billion. We're cutting it from that to that. That is economic nothing. That means zilch. That's worrying about your financial situation because the 2 quarters that you had in that pair of pants went to the cleaners with the pants. And you'll never see them. And if you were really upset for hours, the people living with you would look for another place because you would have been a crazy person who acted that way. We are a crazy nation. We took this crap seriously. All of our people, oh, wow. And to make it dramatic, because if people understood what was being debated here, they would have started laughing. So we had to threaten a government shutdown to make it serious. We had to worry about the nutritional requirements of pregnant women in D.C. Because, you know, these cuts are economically insignificant, but for the people who actually get cut, it isn't insignificant. They're going to suffer. So we had that business with Planned Parenthood taking away their money, National Public Radio taking away its money, to get some of the other ones that they fought over. So for those particular groups, this is serious, it's real. But for the economy as a whole, this is a bad joke. Here's what it means. It means that the Republican and Democratic parties don't give a damn about the deficit because neither of them did anything serious about it. So when they talk about the deficit, don't pay any attention. It's complete crap. No, I don't know a nicer word. I wish I had an academic word, a synonym for crap. I can't think of one. Nonsense. That would be more polite. This is nonsense. Well, then what are they doing? The Republicans are playing to their political gallery. They want those people to be pleased. We're sticking it to the welfare chiefs, and we're sticking it to the abortion advocates in the plan. You know, nothing new here. This is the Republicans looking like, and the Democrats, they say, we're saving the women. We're saving the poor folks. Okay, this is wonderful theater. We will not have the government shut down. We will shut the government. Oh, good for the evening news. Nothing. The two parties are in favor of an enormous deficit and are doing absolutely nothing to deal with it. Now, why would that be? Because our economic system has to have the government bailing it out. It can't work. It's busted. It's gone. We have a capitalist system half in name. Desperate to get out of a crisis it has not gotten out of. and it needs the government to backstop. Let me remind you, 97% of all mortgages written in the United States over the last 2 years are either guaranteed by the federal government or owned by the federal government. In other words, if a bank writes a mortgage to you or your relatives to buy a house, that bank sells that mortgage, gets its money back, having given you, say, $300,000 for the house. You sign a paper promising to pay it back over 20 years. They take that paper and immediately sell it to the United States government, get their $300,000, and look for the next person to write a mortgage.
Fannie or Freddie, right?
What?
Fannie or Freddie?
Yeah, Fannie or Freddie are now government entities. They were taken over by the government, so that's the government. What does that mean? It means that if the government wasn't doing that, nobody would get a mortgage. No bank is going to hold a mortgage. That's why they get rid of it. If it was a good investment, they would keep it. It isn't. They dump it right away. They make the 2 or 3 points, if you know how this works, there's commissions and fees when you do it. That's what they're in it for. They turn it over, give it to the government, and the next, that's how they work. Well, what does it mean? It means if the government wasn't doing this, there'd be no buyers for homes. And here's the estimate for those of you who own your own home. If and when the government stops doing that, your house will lose half of its value in a day. And since for most Americans who have any property, the property they have is their house, you are sitting on the edge of a cliff. And you better be happy that the government is doing that, because it's the one piece of property you have, which has already lost a lot of value, that will lose a lot more value, because the only thing creating a demand for houses in the United States is the United States government. So that's a government that is holding up something as central as the housing industry in the United States. Yeah.
So it's a kabuki theater that the Republicans primarily are advocating the government getting out of the FHA, getting out of the mortgage business? That's
Yes, there are spokesmen. And you know, I struggle with this. I watch a number of these people. I do. I sit there in front of the television like everybody else, and I'm looking. I'm watching what comes out of their mouth, and I going, this can't be. What's coming out of here is complete crazy stuff. And then I forget. The power of ideology. You know, you keep telling a certain kind of story, and people work into that story. It's sort of how they make sense of the world. And, you know, if you do that for a while, and if you're surrounded by people who sort of talk like you do, well, then you're not ready to think about or to hear the idea that it's silly. So yes, there are people saying the government should get out of this housing thing. We should not. The government shouldn't. We should have private enterprise. All I can tell you is the most conservative bankers and hedge funds, people from the finance part of New York City, who I talk to from time to time because of my other work, they're more convinced than I am that those people are crazy. They're crazy. But the fear is maybe the crazies will take over. And people roll their eyes because, you know, it is possible. You can get people so upset, so distraught, so anxious about what's coming that they begin to believe fantastical stories and hypotheses and begin to build their lives around them. And there's a fear that there are some who will do that. Yes, so that the government should get out of the housing business. Look at all the people, and not just on the right wing, we're talking left wing here too, who say, well, you know, why are we bailing out the government, the banks? Just let them fail. Hello, you can't do that. That has nothing to do with right and left. I understand the anger of people who don't like banks to begin with and don't like to see them bailed out, especially when you're not being bailed out. I understand your anger, but if you let those banks go, the system can't function, and that's going to hurt you too. The problem isn't the banks. The problem is a system that works like this. And Americans don't want to deal with that. We want to have somebody we can be really angry at. It's that shithead. That's the one. He did it, or she did it. Or we want to get. I understand that, but it's a mistake. It's just a collect all those bankers and throw them in jail. what do you think the bankers who come up and replace them, what are they going to do? They'll do the same thing. That's what they know how to do. That's how this system works. That's how you function in a system that's set up like this. Let me continue. I want to get some of the basic tax material out. So, we have a fraud here. The government is not going to do anything about the deficit. That's why we're at a point where a rating company says the credit of the United States is no longer the best. That's an amazing thing. That's why I started with it. Neither party is, one of the reasons that Standard & Poor did it is because they know that neither party is doing anything about the deficit. Nothing. Okay, let's turn then to what one could do, since we are not in fact in a situation where there's nothing that can be done, where all we have is shadow boxing theatrics in Washington by one phony-oni after another. What could you do? Well, in order to look at this, I would like to first look at the side nobody talks about, taxes. Let's talk about taxes in the United States. First, there's a lot of ways of doing this, so I'm going to do some. First, do we have lots of taxes in America that are hobbling us and hurting us, that we have to lower the taxes? If you listen to the right wing in America, and I mean the right wing, everybody right of center, this is an endless litany. Chambers of Commerce say this, the think tanks of the right wing say this, a lot of politicians, conservatives in the Republican Party, also in the Democrats, say this. So I thought you might be interested in this. Here's a comparison of what's here, of the proportion of the output of an economy that taxes represent. So it gives you a measure, a comparative measure of a number of countries, how big a share of their annual output of goods and services goes for taxes. That's what this measures here. Okay, in Germany, 45% of the total output of goods and services, that's the value of what has to be paid in taxes. In Sweden, one of the highest in the world, 55%. France, 48%. UK, 40%. Spain, 35%. United States at the bottom, 31%. That's all taxes.
All levels?
All levels. Okay? So the notion that the United States is a burden type thing, that's all crap. If you're interested in the institutions in Washington, there's several institutions, some on the right, some on the left, who study taxes. Tax Foundation is one, Economic Policy Institute, there's a whole bunch. I will give you their names, I will give you their websites, you go there, you get all this data. It's not a problem, it's easy. But the notion that the United States is a heavily taxed society is wrong. It's just wrong. The 100 explanations for it, we can argue about what the meaning of it is, but the statement that we are burdened under a heavy load of taxes is not true. We could therefore raise the taxes in the United States, and it wouldn't even get us to the level of other countries. By the way, Germany is coming through this crisis beautifully with its high tax burden. So is Sweden, and relative to the United States, so is France. This country's in trouble, and this one is.
They talk about the corporate tax, right?
This is all taxes. All
No, I
taxes.
understand, but they're talking about the corporate tax.
I'm coming to that. I'm going to break it down, but I want you to go from the aggregate to the parts. Okay. I also thought it would be important for you to understand the different kinds of taxation that the federal government and the state government and the local governments, how the impact is on people. Because there's an enormous amount of confusion about this. So bear with me in the time that we have left. I'm just going to give you a brief survey on this and then draw the conclusion. Okay. As I told you, the federal government mainly relies on the income tax. Income tax on individuals, income tax on corporations. Let's briefly review what they are and how they've changed recently. First, corporate tax. The official corporate tax in the United States is 35%, so right now. That means that a corporation is supposed to figure out its profits, the difference between the revenue that comes in and the cost of whatever it makes and sells. The difference, the net revenue, the profit, They calculate, and they're supposed to give Uncle Sam 35 cents for every dollar of profit they earn. Okay? Compared to other countries, that is a high rate. But it doesn't mean anything because nobody pays it. There are thousands, literally thousands of exemptions, deductions, exceptions. The tax, if you look at the tax code, it's a document this thick. And anybody who works for a corporation or an accountant has to master this document to know all of the, I'm talking legal now, legal exemptions and limits. Some of you saw, between last meeting and now, about 2 weeks, 3 weeks ago, a front page article, one day on the New York Times, very remarkable, about the General Electric Corporation. How many of you saw that? Okay, good number. So you can all verify what I'm about to say. They asked themselves the question, since General Electric is a very important corporation, very big, let's see what they actually pay. And here's the fun of this. Corporations have to produce annual documents, their accounts, statements. And there they have to list how much money they spend in taxes, because it's part of the inflow, outflow of the company. How much did you pay in federal taxes? How much did you pay in state taxes to the various states where you're active? And how much did you pay in local tax to the various communities where you have a business of one kind or another going on? And General Electric, proud because it had spent so much money, it has hundreds of tax lawyers and accountants working for it. And the New York Times, right there on the front page, says, last year, I think it was last year, 2010, General Electric's total tax bill in the United States amounted to 2.4% of its profits. So it didn't pay 35, it paid 2.4. But actually, if you think about it, it's even better. Because that included, if I'm not mistaken, all of its taxes to the states and localities. So then it's even more of a joke. There are a number of studies by accounting professors. If you go to my website, a recent article, I just don't remember the title, I went through one of the studies by 3 accounting professors at 3 universities collaborated to do a study of the 50 larger corporations, and their average was under 20%. So they get their 35 down. And when you understand that, then we don't have a higher rate. We have a technically higher rate, but not a de facto higher rate for our corporation. More interesting. In the 1940s, I just did a little historical study myself. In the 1940s, at the middle of the 40s, just about the end of the Second World War, the federal government took 50% more money in its corporate income tax than it took from its individual. In other words, you added up all the money gotten from corporations, and it was 50% more than all the money you got from individuals. Another way of putting it, for every dollar in income tax paid by individuals, $1.50 was paid by corporations. What is the ratio today? For every dollar paid by individuals, corporations now pay 25 cents. Corporations are now 1/4. Over the last 50 years, there's been a massive shift of the burden of taxes from corporations to individuals. So on behalf of America's corporations, to all of you individuals, thank you. Very nice of you. Very nice of you to have done it and to not say boo about it. I don't know which is better, that you accepted it or that you pretend it hasn't happened. Now let's turn to the individual income tax. Let's see what we have there. The current top rate is, as I told you before, 35%. What does that mean? Let's be sure you all understand. Everybody pays the same rate on the first $10,000 he or she earns. Everybody pays a little higher rate on the next $10,000, and so on. You understand? The higher it goes, the more people are no longer relevant because they don't earn that much. So if you earn over, I don't know what it is, I think 120,000 now, or something like that. If you earn over 120,000 now, and maybe a little bit higher, then every dollar over that, you pay the top rate, 35%. So for every dollar over 120,000 you get, you give Uncle Sam 35 cents, you keep 65 cents. Okay? That's what rich people do. How was it before? In the 1960s and 70s, in 1950s and 60s, the top rate, every dollar you earn over whatever the top was there, 100,000 or 80,000, whatever it was 91%. Let me do that again. For every dollar that the richest people earned over their top bracket, they gave Uncle Sam 91 cents and they got to keep 9 cents. That was endorsed by Harry Truman, Democratic president. It was endorsed by Dwight Eisenhower, Republican president. It was endorsed by Republican and Democratic Congresses, one after another, for many, many years. I'm not describing the Soviet Union, China, Cuba, or Chad. I am describing the United States. Over the last 50 years, not only was the corporate income tax reduced and the taxes shifted from corporations to individuals, but among individuals, it was shifted from the top to the middle and the bottom. So on behalf not only of corporations, but of rich Americans, I also want to say thank you. Very nice of all of you to pick it all up. We haven't had an increase in taxes. We're not a heavily taxed country. We've had a shift in taxes. You lose. And as long as you and we don't organize, we will continue to lose. That's what's going on. It is amazing not to discuss taxes. The only thing more amazing than not discussing taxes with the history I just gave you, the only thing more amazing is when you actually think to your mind that conservatives in both parties, when you raise the issue of taxes, shake their finger at you and say, that's class war. Class war is what we just lost, friend. We lost 30, 40, 50 years of class war. They've been shifting it every year on us. It's only class war for them when we say no. How outrageous. We should shut up and just let it go. And if the Republicans get their way, if you read the proposal of Congressman Paul Ryan, Republican of Wisconsin, who gave the Republican House of Representatives proposal, he wants to cut corporate taxes and taxes on rich individuals more. Of course he does. Of course he does. And President Obama is shocked and dismayed. He doesn't want to cut them that much. He wants to cut them less than the Republicans. That's what he wants. That's, out of that, you're supposed to develop hope and change as best you can. Let's go, no, I don't have enough time, and these things have to be explained. So give me another minute. Right-wingers, and you're going to encounter this, so it's important I go through this. Right-wingers love to make the following statement. I hear it all the time. I'm confronted with it when I give speeches on the radio and television. That the richest Americans pay a disproportionate amount of the taxes. Let's go through that. The richest Americans pay, I think the top 10% pays 40% of the numbers like that. And roughly, by the way, that's correct. That's correct. So let's begin. Give the right-wingers the numbers. The top richest people pay a portion of the total income tax much larger than their numbers in the population. They're only 10% of the people. They pay 40% of the tax. Correct? Correct. But income tax is really just a name. There are other taxes that the mass of people pay that are not called income tax, but they are the same thing. I'm referring to what economists call payroll tax. What is a payroll tax? It's basically money taken out of your check every week. It's in a little box. If you look at your check, there's a little box that says income tax. And next to it is a little box that says Social Security. And next to that, in most cases, a little box says Medicare. If you look at your check, you'll see. Those are all taken out of your income. They are taxes on your income. But they aren't called income tax. They're called payroll tax. And they're earmarked. The Social Security tax goes to pay off Social Security benefits. And the Medicare tax goes to pay off Medicare claims of the population, of course. But the income tax, we could make it broken down. This goes for the fighter aircraft, this goes for the interstate highway, this goes so forth. We don't bother. So the only proper intellectual economic logic is to lump all of these income taxes, disregard, but then everything changes. Why? Because the income tax in America is progressive. The higher the amount you earn, the higher the percentage. If you only earn $20,000, your $20,000 pay a lower rate than if you earn $100,000, pay a higher rate. That's progressive because the percentage rises with your income. Now let's look at the payroll tax. Does the percentage rise with your income? No. No. The exact same percentage is applied to the first dollar and the $500th and the $5,000th and the $50,000, right up to $108,000 per year. So no progressivity. Rich and poor pay the same for Social Security and for Medicare. And those taxes have been rising much faster than the income tax. That's where the money for the government has really been coming in recent decades. But here comes the best part. If you earn more than $108,000, you don't pay any more Social Security or payroll tax. None. Which means if you earn $1 million, which quite a few Americans do, you only pay the payroll tax on the first $108,000. On the remaining $892,000, your payroll tax is nothing. Which means the more money you have, the lower the percentage of it devoted to the payroll tax. If you put the two together, you wipe out the progressivity. You understand? There is no more progressive tax. If you only look at the income tax and you don't look at the payroll tax, then the top 10% pay 40% of the income tax. But the minute you add the payroll tax, and by the way, friends, look at your check. The dollar taken out for the income tax and the dollar taken out for the Medicare, that's the same dollar you don't have. You can call it green cheese, it won't change the economics of what this is. So I found a source that figures out, that's my last table for you here, a source that figures out for different parts of our income distribution, how much do these people earn, and how do we compare it to how much of the tax they pay? Okay? The top 1% of income, the richest Americans, top 1%, they pay 21.5% of the taxes in the United States. And they earn 20.3% of the income. In other words, the taxes they pay are pretty close to the proportion of the income that they earn. They don't pay a disproportionate part of the taxes relative to the income they earn. The middle 20%, they pay 10.3% of the taxes the government earns, and the government gets, and they earn 11.6%. And the bottom, the poorest 20%, you'll notice the number, they earn 3.5% of all income, the lowest 20%, but they only pay 22 point. Roughly, in other words, each part of our income distribution earns a proportion of the income roughly equal to the proportion of the taxes they are asked to pay. Rich and poor are treated the same. It's a flat tax. Basically a flat tax system, that's right. No progressivity at all. You understand? The progressivity of the income tax is offset by all the other taxes. And you know that from the sales tax, right? You know that if you go into a store and you pay $18 tax on some shirt you buy, and if John D. Rockefeller goes into that store and buys that shirt, he pays the same $18 you do. For him, it's an insignificant portion of his income. For you, it's significant. So that's a regressive tax. It basically hits the poorer people more. If you put all those together, you get this result. But a couple things to end with. Bloomberg News. Hardly a radical. That's, by the way, how Mr. Bloomberg, for those of you who don't know, our mayor became a billionaire because he set up a company early on that does financial news. So it's now one of the most important sources of financial news. It's free. You can go to the Bloomberg website. You get very good economic news every day. I use it literally every day. Here's a story, April 7th of this year. I hadn't even known this. The IRS keeps track of the 400 richest individuals in the United States, measured by the income tax form that they send them. I'm sure people like Warren Buffett and Bill Gates and all of that. And a study was done, reported on Bloomberg, on their April 7th newswire, The 400 US taxpayers with the highest adjusted gross income. The federal income tax rate, what they actually pay, and note, it's not the payroll tax, this is just the income tax that's progressive. What they actually pay fell from almost 30% in 1995 to just under 17% in 2007, according to the Internal Revenue Service. And for the approximately 1.4 million who make up the top 1% of taxpayers in America, the effective federal income tax rate, what they actually pay, fell from 29% to 23% in 2008. It may seem, I'm just reading, it may seem too fantastic to be true, but the top 400 ended up paying a lower rate of tax than the next 1.4 million. In other words, the people at the very top pay less even than the other rich people in their 1% cohort. And they go on to explain why. If you're in that income bracket, you don't do your own taxes. And you don't go to H&R Block either. You hire a very expensive tax accounting firm. You pay them $1, $2, $3, $400,000 a retainer all year long, and their job is to scour the tax code to find each and every legal avenue and that's why they pay those rates.
Buffett announces it every year.
What?
Every year Buffett makes the statement, I pay less percent of taxes than my secretary.
Yes, he's famous for that. Warren Buffett said, I mean, to be fair to him, he's critical. He says it's something terribly wrong in a tax system in which I pay a lower rate of tax than my secretary.
Why doesn't he push?
Yes, why doesn't he? He does. Okay, last point. I focused on taxes. If we had more time, and we don't, I would also have focused on expenditures. I do not want to leave you without saying something about this. The right-wing answer, after we do away with their manipulation of just the income tax and ignoring payroll and all the rest, the right-wing answer, fallback position, is we must not tax rich people and corporations, because then they won't have the money to make the investments, to create the jobs, to put people to work. I get that a lot. So I'm warning you all, you will get that too if you speak to people. So here's the response. What the people can do if they don't pay taxes with that money that they don't have to pay in taxes is not the same as what they will do. To say that they can do something is not what they will. So, let's be fair. Can they use the money they don't pay in taxes to expand their companies, to hire more? Yes, they can.
There's no effective demand for.
But in our economy right now, as any one of these companies will tell you, the Americans are too indebted to buy anything. Americans are unemployed in huge numbers. They're losing their homes. They're scared about their future. I'm not going to expand my business because I can barely sell what I already produce. It would be crazy for me to expand. So they're not going to do it now. So let's see what else they can do. One, they can create jobs elsewhere. They can take the money they don't spend in taxes that we need in America, and they can go and build a factory in China or in Nigeria or in Peru or wherever the hell. So are they free to do that? Absolutely. Here's another thing they can do. They can increase the salaries and bonuses of their top executives with the money that they don't spend. Are they free to do that? Mm-hmm. Have they done it? Mm-hmm. We're not doing anything to prevent. Here's another thing. And if you understand this one, you understand high finance. The corporations and the rich who don't pay taxes are free to take that money and use it to lend to the United States government, which we know they have to because there's such a deficit. And why do they have a deficit? Because they don't tax the rich and the corporations who take the money they didn't pay in taxes and instead they lend it to the government, which then has to pay that money back to them with interest. Had we more time, we would now have the musical interlude of the national anthem. Right? For rich people, here's how this looks. The government could come in a time of national crisis and demand that I pay taxes according to my capacity. I'm rich, I'm a corporation. But they don't. They give me an alternative. We won't tax you. Instead, how about this? We'll come in and borrow the money, pay you back, and pay you interest. And if you were a rich person, which of these two options would you choose? Think a minute. Every rich corporation and every rich person in the United States owns treasury securities. The people who tell the government not to run a deficit are the ones making money off of the deficit. That's how the system works. Don't be angry at them. I invest and manage money for rich people a little bit. I invest in U.S. Treasuries. It's part of what you call diversification of your portfolio. It's what you do. You don't put all your eggs in one basket. You invest a little bit in Treasury securities, a little bit in stocks. That's what you do. That's how the system works. So the irony is our government isn't taxing rich people and corporations. Instead, it goes and borrows from them. That's crazy. It's amazing. If the corporations were going to do something productive for our society when we don't tax them, then the obvious thing to do, which no Republican or Democrat has ever said, would be to put a condition on it. We won't tax you on condition that you use the money you don't pay in taxes to do this, this, or that. We put no conditions at all. That's what they want. They want no conditions, just don't tax them, which is what we're doing. And it is running the American economy into a disaster zone, right like Portugal, Greece, Iceland, and so on. We're just a little further away. Last point. We haven't talked about expenditures. But the story there is as grotesque as it is on the revenue side. I will try next month to spend some time on it, but just to give you a hint. One of the key things that has been done in both the Republican and Democratic plans, and it's happening across America, cuts. The cuts are going to the most vulnerable people. The first and major cut is Medicaid. That is the biggest area being sapped. Medicaid is medical for poor people. Medicare is health insurance for old people, people over 65. So keep those two things separate in your mind. Medicaid is for the poor, Medicare is for the old. The big scream is the cost of it is going up. And you're supposed to have in your mind poor people and old people just using medical care like it was a public facility. That is not the issue. We have a rising, wildly out of control Medicare program because we don't control Medicare costs. I'm just going to give you two examples and we're done. In many other countries, the government enters the business of drugs and medicines and medical devices by saying, okay, I'm the government, I'm going to buy 1 billion doses of aspirin or whatever it is. I'm going to buy 10,000 lung machines. I'm going to buy, 1 million diabetes equipment, things. And then, of course, they get a good price because they're buying in bulk. And then they do what governments everywhere do. They turn around and pass on the savings of having bought it cheap to the people. We know that because every day there are buses from New York taking people to Canada for one reason, not to look at Niagara Falls, to buy cheap medicine across the border, because the Canadians do what I just said. You can buy the exact same medicine you have here for 1/4 of the price, and the drug company makes profit at 1/4 of the price too. Our government chooses not to do that because the drug companies don't want them to. That's why the cost is going up. We have doctors who earn a disproportionate income to any other professional in the country. What's that about? Why is that necessary? Can't you get by on 200,000? You have to have 800,000? What is this? We have hospitals that compete. In this city, we have hospitals across the street from each other with the same equipment, sitting empty half the time. Hello, a rationalization, which is what other countries do, which is why every other advanced country delivers quality medical care comparable to ours at a fraction of the cost.
Better.
What?
Better.
Or better. But the point is, we don't have an out-of-control Medicare system because the government is a bad administrator, or because poor people or old people are just crazy about that. We don't deal with the cost system. If we did, then the whole expenditure side of the budget would be less grievous. We can deal with our deficit not only by taxing those who should pay, but by not pissing away the amount of money that we do now on the expenditure side. The amazing thing in the United States, last point, promise, is that all of what I have said is public information. I didn't make any of this up, and you don't have to go to any obscure source to get it. The genius of American politics is that all of this happens below the radar, outside the frame, off the TV, out of the radio. It's all there, but we don't have the organizations that make that public. The difference between us and what's happening in Europe is not the economic crisis, that's similar, but they have organizations, trade unions, socialist parties, communist parties, anti-capitalist parties, green parties, who are constantly putting this information out there and not allowing governments to make it up as they go. This debate of the last 3 weeks would have been the butt of unbearable humor in the French or German newspapers. They would have had a field day with this. Instead, I have to go on the radio and television, which I do a lot these days, and I'm forever shocking people because I never heard this before. I don't want to be shocked. I want people to look at me and say, oh, I heard that already. They don't need this. But for that, there have to be lots of mechanisms. Okay, folks, I have promised not to keep you all late. If you have some questions, come up. So, let me put it differently. Anyone who wants to leave now, please leave with no bad feelings, but I'll stay another few minutes if you want to.